let's understand more that where are we headed with respect to the technicals. And for this, we have been joining by Vinay Rajani, CMT Senior Technical and Derivative Analyst at HDFC Securities. Hi Vinay, good afternoon. Very sharp gyrations is what we are witnessing on the market. So help us understand what do you make out of this, and which side looks more stronger to you at this point in time? Maybe it's the bulls or the bears who are seen to be taking the lead.
Yeah, good afternoon and thanks for having me on the show. So yes, Nifty bounced back in the session from the low. It went up by 300 points and attempted to recover and in fact surpass the previous day's high, but it did not able to. So and again it has come down. So definitely there is a higher chance that now it will move further towards the downside only because there is a trend line support. It gave respect in the intraday session but did not sustain at higher level, and again it is attempting to break that trend line. So I'm talking about the trend line which adjoins the recent swing lows. The lowest level we have seen in this rally was the 23,047, and after that 23,100 was the immediate swing low. So if we adjoin that trend line, the support comes in at around today's low only. But overall, the way it has come down from the higher levels, it looks like that the bears are having more dominance right now, and the chances of going down looking higher than from here. So I'm expecting that in the coming days there is a higher chance that Nifty will break the recent swing low of 23,047 and move towards the 22,800. There is a next support at 22,800. So I feel that dominance for the bears is higher, and Nifty is likely to breach the 23,047 support and ultimately is headed for the next target of 22,800 in the downside.
Okay, so clearly bears in control. 22,800 is the level to watch out for. Most likely 23,000 will not hold is what, our technical expert is guiding us at this point of time. But, Vinay, if I had to ask you, which is the sector that is looking the weakest or will be the one which will come under pressure of the sell-off, which is the weakest link and which is the strongest one?
So let me talk about the strongest one. So oil and gas sector looks stronger to me. Many stocks are looking strong. Like today, OMCs have started performing well. So OMCs are looking strong within the PSU space and within the oil and gas space. So I like stocks like HPCL, IOC, BPCL. Those are likely to outperform those stocks which are related to crude oil prices. If crude oil price comes down, then the paint stocks can do well. Then some of the oil marketing companies can do well. So this is the strongest area in the market. And as far as the weak sector is concerned, I think high beta sectors can underperform, like real estate, banking. These are the stocks which sectors which are looking weak and can underperform the market. In fact, IT is also not supporting right now, so IT can underperform. So yes, overall, I feel that real estate, banking, and IT can underperform in this kind of scenario, and sector like oil and gas can relatively outperform. Within the oil and gas space, I like oil marketing companies a lot.
Liking the oil marketing companies, and yes, indeed, BPCL and HPCL are seeing good day today at least. But when I help us with your stock ideas, then.
Yes, as I said that I like oil marketing companies, and the strongest amongst the pack is the HPCL. So yesterday it formed a doji candlestick pattern, and today it has shown some follow-up movement. So HPCL January future can be bought around 369. I would suggest a stop loss at 363, and I'm expecting a target of 381 in the coming sessions. And on the other side, I like to go short, which is the CDSL. So CDSL, the entire capital market theme is under pressure in today's trade. So CDSL can be shorted here. CDSL January future, I am asking traders to go short around 1533. Stop loss can be kept at 1560, and on the downside, I am expecting a target around 1490. So CDSL January future can be shorted, and HPCL January future can be one can go along with the mentioned stop loss.
Whereas within some of these heavyweights, Reliance, ICICI Bank, HDFC Bank, do you see the case for a bottom fishing, or do you think there's further weakness in some of these names and even the broader markets, Dixon Tech and Zomato of the world?
Yeah, so Zomato and these new age tech companies have performed very well in last year, and now the stocks which were trading near its 52-week high, they have started underperforming, and those stocks which actually was underperforming previously, they have started recovering from the lower level, and this kind of phenomenon comes when result seasons kick in. So the large cap stock like Reliance, Asian Paints, Berger Paint, these stocks did not perform in last 1 year, and they are actually outperforming in this kind of scenario. So I'm expecting that yes, the Reliance, which already came out with a good results and relatively underperformed in last 6 months or so. So I expect that Reliance will continue to outperform stocks like IOC from the oil marketing companies. Then paint companies are looking stronger to me. So these large cap stocks can outperform in the falling market. And overall, the stock like Zomato and this Swiggy and the other new age tech companies may remain under pressure from here.
All right, so betting big on the large cap names. But with this, Vinay, we'll let you go on that. Thank you so much for taking the time out and speaking with us.
If you like this video, then like, share and subscribe to ET Now.